Good afternoon, everybody. My name's Richard, and this is another video from Platinum Crypto Academy. Hope everyone had a wonderful weekend, and I hope all the occurrences across the world are giving you one thought: where can I store my money and wealth? Today's video is going to cover what's going on across the world in terms of banks, how they're stifling the industry. Two, I'm going to look to what Putin in Russia. Now, I'm no backer of communism. I'm no backer of, that sort of control over a country. But some of the points he's raised, I think, are quite poignant into what's going on in today's market. I'm going to talk about millennials and how the shift of wealth or the transfer of wealth is going to impact potentially Bitcoin and cryptocurrencies. And then I'm also going to talk about a bit of lending and how Ledger, Northern Trust are getting involved and entrenched with insurance companies and fractionalized bonds on the blockchain. So a lot to cover today. If any of that sounds interesting, jump on board. Subscribe to Crypto Now Weekly, where a lot of our content gets delivered each week. Jump over to Platinum Crypto Academy. And so let's get started. So first thing I'm going to talk about is this really shocking article that I saw from Cointelegraph about the Bank of America closing down an ex-PayPal CFO's account. Did you buy any Bitcoin? Look, pointing a finger. Quite a funny image. I think that this is absolutely crazy if this is true. Obviously, this is news, so I'm not, has it been validated? I think I saw an image on Twitter of the actual letter, so it seems quite stark. But after being a customer of Bank of America for 20 years, I received this notice today that they have decided to fire me as a customer with absolutely no explanation. Now, this is crazy because that means that, firstly, I think banks are absolutely in fear of cryptocurrencies and digital currencies as a whole, never mind Bitcoin. But to have you would have think this guy's got some sizable assets just to say in 30 days your account's going to be closed is incredible, the way they can do that. And this is what I mean by the new age of wealth and wealth storage. Banks can do whatever they want. And I'm not trying to be an ideologist here, but there has to be a better alternative, and cryptocurrencies is one of those alternatives. I'm not saying it's the best, I'm not saying it's the worst, but surely what's currently going on, is that really something that as a global as a globe, do you want to be putting your money into a place which can just turn it off like that? I'm not sure that's the best way. Well, that was a really interesting take on it, though. The next one, I've spoke about this before, but as we know, the banks in Lebanon have been closed for almost a month now. They've just opened up. The Lebanon Banking Association has just agreed to a weekly withdrawal from accounts of $1,000 limit. Sorry, a weekly withdrawal limit. Now, if this isn't, they're not calling it capital control, but if this isn't capital control, I'm not sure what is. They're putting restrictions on people using their own money. Nothing else can be called capital control apart from this. And the reason why I'm talking about these stories is because it's very hard for, day-to-day people to think that, they probably think nothing's wrong. They haven't even looked into the banking rules, what they can do, what they can't do with your money. But by producing these videos about what's going on in the world, it's bringing to light current problems which can be solved with technology that's readily available today. There's many different solutions out there, but the fact is, these guys in Lebanon, they're under restriction of what they can and can't do with their money, and that is in anybody's world. Any country that does that, it's not good for the domestic currency and not good for the general public. I thought this particular story, again linking to banks and linking to what's going on, the former CEO of UBS and Credit Suisse, two of the largest banks, he basically said recently, negative interest rates are crazy. That means money is not worth anything anymore, yet no one is doing anything about it. And he mentions except for Bitcoiners. Now, okay, he's obviously a bullish guy on Bitcoin, and forget even the cryptocurrency statement there. But he's accounting for things that other YouTubers, other companies, other articles have written about how money is getting devalued time and time again by quantitative easing programs and other initiatives which central banks are putting out there. An ex-CEO of Switzerland's two largest banks is coming out with a similar statement. So look, everything is all tying together. Banks are struggling. Money is getting devalued. There has got to be an alternative. And again, I keep piping on about cryptos. This is a crypto channel, but that is, the only option, or one of the only options, which has a potential future. Yes, you've got the gold argument and gold-backed currency. Yeah, absolutely. Much better than what we've got right now. Much better than what we've got right now. But there's alternatives out there. And I know I mentioned about Putin. Obviously, he's going to be against the US dollar. There's going to be, there's always been tensions between that and what he's saying. But in this particular statement, I think he's reading true that he's saying they're seeing attempts by the US dollar to use it as a political weapon. Putin and I think it's a big mistake to do that, because there are there's stark contrast between, imposing sanctions on a few countries, but having them on, loads of major countries out there that are going to then look for an alternative. That's going to again make them look for an alternative. What could we say? An alternative currency as their baseline to transact on. What could they use? Cryptocurrencies could be used. Gold could be used. Maybe even another primary currency in the world could be used. But what happens is these countries have got to be able to trade. They've got to be able to sell their oil. They've got to be able to sell their natural goods. And having sanctions from a US dollar perspective to say that you're not able to transact on the US dollar, they're not going to sell any US dollar or whatever, that it's in the long run that could damage the US dollar. It's one of those things that instead of waging a war, you can wage economical war, and it could be an opportunity. It's clear that it's going on around the world, and Putin is just addressing that in, I think it was the energy, plenary meeting of the Russian Energy Week Forum. So he's made a statement, and I just thought I'd bring that to light. So I also mentioned that with all the past events that I've just highlighted, or the events that are going on in the world, how is the wealth transfer going to take place? Well, looking at research and my own thoughts is that it's no surprise that millennials are considering other forms of storing wealth, as other age groups should be. But millennials are, by far the front runner in terms of looking at alternatives and being more, I should say, I wouldn't say have a higher risk appetite. They just understand new technologies, I suppose, better than maybe baby boomers may, or I can't remember what the group before that was called, but they're up to looking at alternatives. And from research, it says the majority, 68% of millennials, would strongly consider leaving a traditional banking relationship and swapping to a tech company digital banking or a payment service, like Facebook, obviously, Google, Apple, Amazon offerings. This is an absolute contrast with the baby boomers, that apparently only 32% are ready to make the same shift from their current banks. A quarter of American millennials aged between 24 and 38 and earning either as a pair or an individual over 100,000 or owing 50,000 in investable assets are either holding or using cryptocurrencies. So that's 25%. That's great. That's really high. I think anyway. Another 31% are interested in using cryptocurrencies, but may not have access to them for education. From an education perspective, they don't know how to get in, or they just haven't had a chance to get into it. What I also think is really, really interesting is this particular comment, this particular article here. Now, I've spoke about crypto lending before, and I've spoken about how, this is an alternative to storing all your wealth in banks. Well, lending, lending in cryptocurrencies is a new sort of thing over the last year that's occurred in the market. A study was performed by Blockchain Capital, I believe it was, which found that 9% of the population owns Bitcoin, including 18% of those aged 18 to 34. So that's a quite high one, as I mentioned, from a millennial perspective. Millennials already opt in for a system based on math and code versus that of legacy institutions. Compound, which I'm just coming on to now, raised 25 million to expand its cryptocurrency lending. At a time when high interest rate savings, as you all know, if you've got money in your bank, you're not going to be getting high interest rates at all. In the UK, you'll struggle to get 2%. You'll struggle to get that. Instead of storing money with a bank, the option to lend it out to cryptocurrency owners on Compound as an automated lending platform is growing. The actual, people are adopting this now. A growing number of investors are seeking high yield who have turned to Compound, a startup that is part of an exotic new industry known as decentralized finance. You should look decentralized finance. There's huge amounts of literature on it and huge amounts of information about how it works and what goes on. But this article goes into talking about Craig Hummel. He found a way to earn more than 8% this past summer instead of storing his money with a bank. I think that's phenomenal returns. Where do you hear about 8%? The San Francisco-based company, which recently raised 25 million in a Series A round from a venture capitalist firm, Andreessen Horowitz, relies on software and so-called smart contracts to bring together crypto borrowers and lenders. So there's obviously demand for money in the space, and there's obviously demand, so they're filling that demand from lenders. So if you put your money with them, you're going to get a high level of return. Great. It's just an alternative to what other people are known as more traditional investing and lending and savings, essentially. So in other news, however, we're seeing another leap forward from Ledger. Everyone knows Ledger. You should get hold of one if you haven't, because that's the true way to hold your cryptocurrencies in a safe way. The Nano S is a superb bit of kit. I've got several myself. Basically, why I'm bringing this up is because the Ledger has basically joined forces with Marsh, an insurance company, basically to ensure institutional custody of cryptocurrencies. So again, custodial services usually have a high level of insurance. Previously, insurance companies haven't been that engaged with cryptocurrency and digital assets. Now you can see one of the biggest security firms in the space for holding cryptocurrencies is teaming up with the help of a big name called insurance broker Marsh. Great development in the space. And the final story today, the final story that we're going to discuss is Northern Trust testing fractionalized bonds on the blockchain. Again, moving finance onto the blockchain to have true transparency and security. Now, what these guys are doing, Custody Bank, Northern Trust is testing trading of fractionalized bonds on the blockchain, as I've said, working with Singapore-based debt markets company Bondivalue. The bank is providing asset servicing for large high-grade bonds that will be tokenized and divided for retail investors on the Hyperledger Sawtooth. These bonds are normally too large for individual investors, but the quality of the bonds is attractive. So it's bringing fractionalized investment opportunities to retail traders that normally wouldn't have access to such type of bonds. That's got to be a great thing. Last story of the day, Hope everybody's gonna have a great week. Look out for the markets, and long live the blockchain and long live cryptocurrencies. Speak to you soon, everybody. Have a great week.